about to leave, already packing. Come with me, I'm not really asking. We'll get away to a place where we don't know. About to see the world in action, what we can be, life with no distractions. We'll get away, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out. Die with my own doubts. Be free with me. Let's go. Let's be free with me. Be free. Not looking back, eyes on the freeway, Bonnie and Clyde, a classic cliche. We're on the run, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out. Die with my own doubts. Be free. Let's go.
Good evening, everyone. It's Jim here from 222 headquarters, which is now doubling up as a Bitcoin trading center. And I'm joined today for tonight's live, our 12th A-Level Economics live revision session. I'm joined by the dream team. John bottom left, Kathy top right, and Ollie
Hello.
bottom right.
Hi.
How are we doing?
Very
We're
good.
good.
How are you?
We're good.
Back-
Super excited.
This is a big topic, Kathy, isn't it? It's one I know that you, as a former city economist, it's one that's very close to your heart as an important topic.
I'm a former Treasury economist, actually, not a city economist.
Well, it's
but
close.
yes, it was very close. I love financial markets. I think it's an awesome feeling when you're good at it, and you can just feed it into so many parts of the syllabus to get extra credit and marks.
Brilliant. Ollie, do you want to give us a flavour for how the session will run? We've got about 30 minutes or so I'm guessing pretty fast pace as normal.
Yeah, absolutely. So it's going to be fast paced. We'll whiz through some of the questions, but as usual, it'll be great to see any answers that you think you've got in the chat. So whether it be A, B, C, or D for multiple choice, but there are other formats as well. So we'll give you a heads up about the type of format, the answers we want to see in the chat. As Kathy said, this is a great topic to bring into loads of different answers. Really good evaluation as well. And John, we were saying earlier there was a bit of an urban myth that the 2008 financial crisis actually happened because financial markets weren't taught on the A-level economics syllabus back then, but they are
Must be
now.
true.
Yeah, must be.
Can't possibly happen again then, Ollie, can it?
No, exactly.
No.
Well, we'll see how many correct answers. Maybe this might be a bit of a warning. But should we crack on?
Yeah, okay, have fun.
Fantastic. So we're just going to start with some quickfire missing vowels. So imagine there's a textbook and all the vowels have just fallen out of this textbook. And the topic that we're going to look at are regulatory bodies in financial markets. So should we start with the first one? So what do we think this regulatory body is? Without any vowels, hoping this is going to be a relatively easy one to get started. It'd be great to see any answers on the chat if people have them. Oh, Emma and Phoebe, Rebecca, Kit, all saying Financial Policy Committee. All very good. That's a pretty easy one. Zach saying it as well, and Patricia, Ethan, everyone saying Financial Policy Committee. Fantastic. So that was an official committee founded by the Bank of England in 2010, and they're a macro-prudential regulator. So they try and protect against systemic risk in the financial sector. Fantastic. Should we move on to the next one, Jim? What do we think this one is? I was just about to try and say it without any vowels, but I just don't think I can. I think I make a fool of myself.
I think you should.
That final word must be thirsty.
Ribbon 30. Yeah. Naria, Elizabeth, Phoebe, Ben. Lots of right answers I'm seeing so far. I'll give people a couple more seconds on this one. George, Chesko, all saying Prudential Regulatory Authority. Fantastic. So this one is a micro prudential regulator. So they try and promote stability of individual banks and promote competition. So they can set things like capital and liquidity ratios. Fantastic. Jim, the third, please. What do we think this is? Seeing lots of 30s as the third word. Hopefully that's a bit of a clue for this one. Phoebe already come in with the right answer. Always very quick on these, Phoebe. Faith, Ashwin, Mia, Chesko, all saying Financial Conduct Authority. Jim, are they right? Yes, they are. So they are a micro-prudential regulator. They protect consumers from sort of financial products that may harm them. So, for example, and also regulate individual firms. So the Financial Conduct Authority fined Deutsche Bank £227 million for their involvement in the manipulation of LIBOR, which was a London interbank offering rate. That's a great example to look up if you haven't heard of that before. And the final one, this is a bit of a tricky one, this next one, Jim. We'll see if anyone can get this. I think it might take a while for the right answer to come through, but we'll see. Maybe people will surprise me this evening. Maybe I'm in an overly pessimistic mood.
It's not
see if anyone knows this one. It's not. No, it's not an authority. It'd be interesting to see who's the first person to get this one right. Oh, Sim, Phoebe, very good. Maria, Faith, all got it right. Fantastic. Jim, what is it? It's the Basel Committee. So the Basel Committee are sort of an international group. So they were founded by some central bank governors to promote global cooperation in banking regulation. So the most recent regulations, Basel III, so they sort of set capital levels for banks, recommendations. So, for example, that banks should have 4.5% capital levels in relation to their risk-weighted assets. Fantastic. I think I'm handing over to Kathy now. Am I, Kathy?
You are. Brilliant. Yes. So I've got a couple of multiple choice questions to start off with. So the first one, I think, relatively easy. Which financial institution is most likely to offer a mortgage? Is it an insurance firm, a retail bank, an investment bank, or a hedge fund? So again, I have not even finished and the answers are pouring in. I can see a steady stream of B's. Does anyone want to offer any other possible answer? The chat again, all pretty convinced that the answer here is B. Jim, do you want to share the answer with us? And of course, it is. This is one of the key things that the retail banks or the high street banks do. So insurance firms, their role is to help economic agents manage risk. Investment banks, so they might have the name bank in their title, but they do quite different things. So they help businesses raise finance through selling shares and bonds, and they help arrange mergers and acquisitions. Hedge funds, in case you didn't know, well, what these do is they pull funds from investors and they employ a range of quite risky strategies, actually, to try and get people a better rate of return. Jim, can we have the second multiple choice question, please? So again, answers on the chat. I can just see out the corner of my eye, someone's got answer E. No, it's definitely not going to be answer E here. Which of these was not a negative externality of the 2008 financial crisis? A fall in GDP, higher unemployment, taxpayers bailing out banks, and easier to obtain a mortgage. Remember, the word is not. Which one of these is not a negative externality of the financial crisis? So again, I am looking at a steady stream of D's. So add your answer to the chat if you'd like to have a go. Looks to me like we've got a group of people on tonight that are every bit as good as we have for labour markets the other evening. Just give you a couple of seconds more. Okay, Jim, would you like to give us the answer? And of course, it is D. From what I'm looking at, absolutely everybody was right on that. So I think as well that this concept of externalities associated with the financial sector of the economy, it's a really interesting way to think about it. So when there's a problem, there are big negative impacts pretty widely on the rest of the economy. And when the financial sector is working well, it is the other way around. We see these really, really positive effects coming through. Okay, Jim, can I have my bubble quizzes now? So I have got 2 bubble quiz questions coming up, and if we can have the first one of them, please. So the question here, which of these are ways that commercial banks make money? Now, if you remember with a bubble quiz, it might be all of these, none of these, just some of the answers. So if you can add to the chat, please, which letters you think are correct. So somebody has, I can see C from Zach on the chat. Let's have a look. D, A and C. I've got all 4. It's on the chat now. People seem a little bit less sure about this one. This one, there's more to read, I'll grant you, but a little bit slower. C and D, A, C and D. Answers are absolutely flocking in now. Just give you a couple more seconds. Okay, Jim, can we have the answer to this one then? Right, so the correct answers are A, C and D. So B is a way that a certain type of banks make money, but this would be an investment bank for B to be correct. Jim, can I have the second one of the bubble quizzes, please? Now, this one I think is a little bit harder. So moral hazard is most likely to result from, is it government bailouts of financial institutions, higher capital requirements, independence of the central bank, or more stringent financial regulation? Let's have the answers. I've got a D, I've got lots of A's. Have a bit of a think and then have the confidence to give it a go. I've got A and C, C and D. Answers are really pouring in now. Lovely to see so many people taking part. I'll just give you a second or 2 more. All right then, Jim, can we have our answers here? And of course, the correct answer here, it is just A. So moral hazard, just in case anyone's not completely sure. This is when someone runs a risk they wouldn't if they were going to bear the whole cost themselves. And things like government bailouts of financial institutions, these are an absolute classic where the bank takes risks or behaves in risky ways, thinking that the government is going to sort it out at the end of the day. B and C, B and D, I should say on here. Sorry, my apologies. Now, there are some people that think these are examples of regulatory failure. Not everyone would agree with that, but some people do. And the independence of the central bank is generally reckoned to really improve the functioning of the financial markets. It increases the sort of credibility associated with their actions. There's more openness, accountability, transparency, and so on. Right, I'm going to hand over now to John for his set of questions.
Thanks, Kathy. Good evening, everybody. Well done, by the way, to all of you who are taking part and giving your answers tonight. I think particularly William Holford Thompson seems to be particularly pleased with himself. Keep going, William. Let's see how many more correct answers you've got. I've got two grid-based questions for you. I think the first one I think you're going to find fairly straightforward. The second one's a bit more tricky. So in this one, I want you to find amongst those 9 sets of phrases there, what are the main functions of money? So on there, you've got some sort of characteristics of money or some descriptions that relate to money, but which of those are actually the main functions of money? Now, you don't need to type out the actual answers. You can just give me grid references. I'm not going to tell you how many there are just yet. Have a look at those 9 and have a think about which ones you think are the correct one. Henry was our first one in with 2A, 2B, 3A, and 3C. Keep having a look though, Henry. I think you may have got 1 or 2 of those not quite correct. So what are we going to do? So a function of money, a purpose of money. So how are we going to, what is the important thing that we're trying to get out of using our money, rather than just its characteristics or how in the end money will be used by itself? So we're getting lots of good answers in now. James has gone with A2, A3, B2 and C3, which is, I think, very close to the correct answer. Let's have a look, Jim. Let's go for the correct answer now. I think loads of you are getting it spot on. Yeah, there we go. A2, medium of exchange, this idea that we move away from being a barter-based economy so that we can use money so that we can exchange that money for goods and services. Money needs to act as a measure of value so that we can actually differentiate the value of goods and services one from another. A standard of deferred payment so that we can have something now but pay for it later, and that basis of credit is a really important aspect of the success of economies like the UK's. And then finally, it's a store of value. So like a few other things that might have stores of value, so land, for example, may keep some value, but money does as well. Yes, money may go down in value as inflation increases the prices of products, but at least it will maintain some store of value. Well done for not putting to use in a supermarket trolley. I don't think I spotted anybody putting 2C down particularly there, although that of course may be the only purpose of a pound coin in the future. Right, let's move on to our next little activity. Right, this time you've got 16 phrases on screen, and those 16 phrases can be categorized into 4 different groups. So each of those 4 groups has 4 answers. Now I think this one's a little bit tricky, so I'm going to give you a moment to have a read through those 16 phrases, and what you're trying to do is separate them out into 4 different categories. What I'd like to see is when you spot one, can you tell me what one of those categories might be? I think if anybody spots all 4 straight off, that'd be really, really impressive. So let's just begin with the sort of like slightly easy part of this. Can anybody spot 1 or 2 of the categories that we might be using here on this connection wall? Remember, each category will have 4 different connections. Okay, James is our first one. Sorry, Emma was our first one in with Ethan. I apologise. It's going so fast on the chat window. Ethan and Emma said types of markets. Well done. James has said something about bond markets, and Henry's gone with bonds. Yes, we've got something to do with bonds there, but I need perhaps a little bit more than just the word bonds. Lots of you going for types of markets. Faith is actually identified as different types of financial markets, which I think is even better than just saying types of markets here. Types of funds, maybe. Just go. Types of markets. We've had types of markets so far. Something to relating to bonds. We know that. We'll see what that one is in a second. Types of funds. Chesco, yes, they may be relating to funds. Ben's our first one there. Ben has gone with bond yield equation. Thank you, Ben. That's the first one to identify fully the bond one. James is going with different types of investments. Yes, I'll give you a sort of like a longer answer than that. Sources of cash for banks, Zach. I think I know which one you're talking about there, but we'll come to that as our fourth category. Right. I'll tell you what we're going to do. We're now going to actually try and identify some of these categories. Most of you have done really well there. So let's start with that first one, types of financial markets. Can you, into the chat window, identify the 4 types of financial markets that are there on our connection wall? So let's see what you can come back with here. So the types of financial markets. I think it's our first one because I think it's relatively easy. There's a word in there that'll help you. So what are our examples of? Okay, Nonk has gone with forward, spot, money, and capital. Chesco's also gone with money. Emma's gone with money, capital, spot, and forward. Okay, let's have our answers for this first one. I think this one's the easiest one because they all end in the word market or market. So we've got forward, spot, capital, and money. Forward and spot. So forward markets are where we are trading in something whose value will be yielded later on, whereas a spot market is something whose value we're trading in and its value is immediately found. Whereas capital and money markets are relating to either medium and long-term investments, as it would be with capital markets, whereas the money market is trading in short-term investments, anything that's under 12 months in its entirety. Right, the second one then was components of a bond yield formula. Can anybody find the 4 components of a bond yield formula? Then how many of you have seen this formula? Should know it. Could be something that actually could turn up on your exam or on your assessments that are coming up. Somebody could ask you to work it out. So what are the components of a bond yield formula? Emma's first one in, I think. Yields, coupon, 100 market price. Phoebe likewise. James and Chesco's actually told me the formula. Yield equals coupon divided by market price times 100. We're doing really well. So let's have a look at this, Jim, if we can see the answers. Now that Chesco's actually told us the full formula. So this idea that we have a coupon value, divide that by the market price, multiply by 100. And of course, the yield in a bond tells us the value when we're purchasing that bond. So if the actual market price of our bond goes up, whereas the actual coupon remains the same, it means that the percentage yield decreases. So as the price of our bond goes up, its yield decreases. And of course, the inverse is true. As the price of the bond goes down, the yield as a percentage, the coupon as a percentage of the overall value increases. Right. Our third category then is non-bank financial institutions. This is the title. I didn't spot it from anybody before, although many of you were coming up with financial institutions. So can you spot the 4 non-bank financial institutions that are on screen? We've only got 8 left, so it should be fairly straightforward. The 4 non-bank financial institutions. Done a lot about different types of banks tonight, but not necessarily about the other types. Ethan's our first one in with hedge funds, insurance firms, private equity firms, and pension funds. I think Chesco's going with something similar. Let's just see if we've got anybody coming up with anything else. Yes, Nonka's gone with pension as well. Right, yes, we're all right there. Let's have a look at those 4. Kathy's already mentioned about hedge funds, insurance funds, and pension funds. Fairly straightforward as well, I think. Private equity firms, so firms that invest directly into an ongoing or a startup business. You may have seen today in the news that CVC, massive private equity firm, have further invested in Rugby Union, and they've bought a big stake. I think it's about 15% in the Rugby Six Nations Championship. So private equity firms. Okay, our last category. And if we just highlight our last category, we can see what they are. Thank you, Jim. They are liabilities on a bank balance sheet. So just to remind you, of course, a liability is something that a bank owes to other institutions or other individuals. Long-term borrowing, deposits from savers, share capital, and short-term borrowing. Okay, I think we're over to Ollie with a crack the code activity. Ollie.
Yes, we are. Thank you, John. So we're going to stick on the topic of bank balance sheets. And for this one, I'd like you to rank the assets on the bank's balance sheet from the most liquid to the least liquid. And you'll have a sequence of 6 letters, starting from the most liquid going to the least liquid. And Jim, if you start the algorithm now, if you put your sequence on the chat, once we see the correct answer, the algorithm will bring it up. So let's have a go. Let's see what people think. It might take a while. Feel free to have a couple of guesses if you need to. Hopefully the algorithm, if it's working, will... Jim's just said it started. Fantastic. Well done, Jim.
Yep.
Hopefully it will spot the first right answer. So these are all things that you could find on the balance sheet of a bank, or assets. So not liabilities. That was the last category in John's activity. So we've got Emma and Phoebe, both starting with B. So both saying that cash is the most liquid. I think everyone so far is saying that cash is the most liquid asset. That's correct. Well done. But I don't think I've seen anyone with the second correct. Now, some people, it might be slightly up for discussion, a couple of these, but I'm going to stick to my guns and keep the order that I think it is. Elizabeth thinks F. Balances at the Bank of England. Elizabeth thinks F's the least liquid. That's interesting. Oh, I think was it right. Phoebe? Jim? Well, Jim, the algorithm will be able to tell Jim, so we'll see who he thinks got it right first, but I potentially spotted Phoebe, so fantastic, Phoebe. Well done. So cash is the most liquid asset. Fantastic. And so liquidity, this is the idea of sort of the ease and costs with which assets can be turned into cash and then used as a means of exchange. So Phoebe, it was you, well done. Whereas the least liquid fixed assets, something, let's say like a house. In fact, there's actually quite a lot of cost involved with turning a house into cash. You've got estate agents fees, you've got to get someone to go and move all the stuff out. So it's not very easy. Balances at the Bank of England. So most banks will have deposits held at the Bank of England, money at call or short notice. So that might be interbank lending, for example, when one bank lends the other, but can demand it's repaid pretty soon. Investments, things like bonds and shares that the bank might own. And then advances, the things like loans and mortgages that banks give out to consumers. Fantastic. Well done, Phoebe, on that one. Should we move on to the next activity, please? So this is a categorise. Now, what I would like you to do for this is to have a look and have a read through the 8 phrases that are in the boxes at the bottom. And you'll have 60 seconds when I say go to put them in the correct category. So the 3 main types of financial markets. So Jim, can we start the clock, please? Brilliant. So I'm not going to talk too much about what these types of markets are because it will give away some of the answers. But these are the 3 main types that you should all know about. These are really, really good ways to sort of bring into, even if it's not a question on financial markets, being able to talk about some of these factors are a great way to evaluate and show sort of some real world knowledge and context in your answers. So if you put in the chat, maybe M and then a number for the money market, which numbers you think are related to that. Try and, obviously it's not going to be 3 in each, so there'll be a slightly odd, uneven number. Chesco thinks foreign exchange markets 2 and 8. Any more ideas in the chat? Zach thinks capital markets number 1s in capital markets. Give people a few more seconds. I know there's a lot to read there. Fantastic. Jim, can we see the answers, please? Brilliant. Okay, so what did Ben say? Ben said money markets 3 and 6. Well done. So yeah, 3 and 6 were right, Ben, but also 5. So the UK government can sort of issue treasury bills with short maturity. So in money markets, it often tends to be periods of up to a year. So these short maturity treasury bills can be issued in money markets. Banks, as we mentioned earlier, money at call and short notice, banks can lend to each other potentially overnight to provide liquidity. So that's money market, things over shorter periods of time, usually less than a year. Capital markets, governments might issue longer term bonds, firms might issue shares to raise money. So this is longer term financing. And then in foreign exchange markets, that's where currencies are traded. And as John mentioned earlier, currencies can be traded now on spot markets, or they can be traded at an agreed point in the future. So that gives a bit more certainty for traders, and that's forward markets. Fantastic. I think I'm handing over to Kathy, am I?
You are. You are.
Brilliant.
So here we are on revision blast number 12. And this is the first time I've had some of these statement pair questions. And I've got 3 of them this time. So here's the first one. And what you have to do is to decide, are they true, are they false, and select the right letter to go with the correct combination. So statement number 1, central banks act as a lender of last resort to banks. Statement number 2, the idea that some banks are too big to fail helps to lower the risk of moral hazard. So let's have answers on the chat. I can see loads of them coming in, absolutely loads. I can only see B. So everybody out there seems to be pretty convinced that B is the correct answer. Just a couple of seconds in case anyone wants to say anything else. Okay, Jim, do you want to reveal the correct answer? And of course, it is B. I am super impressed at the amount of knowledge that the chat has on financial markets. So the first statement then, of course, that is true. So central banks do act as lender of last resorts, and they do this to protect liquidity in the market. So they're going to do this when there is a short run shortage of money, and they will lend providing a bank is sound. They won't lend in this capacity to a bank that is in trouble. Statement number 2, well, that's the wrong way round. It increases the risk of moral hazard, not the other way around. Okay, let's move on to the second one then, Jim, if we could, please. So same thing, 2 statements. You need to decide if they are true or false. Statement 1, the market for medical insurance might exhibit both moral hazard and adverse selection. And statement number 2, adverse selection means that people who are most likely to buy a product are the ones that a seller least wants to sell to. So I will give you a few moments. Oh, we've got some disagreement this time on what people think the answer is. So do put your answer on the chat as soon as you think you know. Little bit more hesitation on this one. People were super happy with the last one. Little bit more unsure this time. Lots of A's coming in now. Just give you a little bit longer, a little bit longer. Okay, Jim, can we have the answer? And the answer is A. So both of these statements are true. So it's probably easier almost to start with the second one. So adverse selection does mean precisely that people who are most likely to buy a product are the ones that the seller least wants to sell to. And this is happening because of the asymmetric information that we have in this case. And it means that the insurance companies price policies in a way that drives out the low risk customers. And insurance, if we come to statement number 1, this is a classic example of moral hazard. So perhaps if you've taken out ski insurance, when we're actually able to do that again, that you will take more risks knowing that your insurance company will cover the cost of any injuries that you might incur. Right, the last one of our statement pairs then, Jim, if we could have that, please. So this time, statement number 1, microprudential regulation is aimed at reducing systemic risk in a financial system. And statement number 2, capital requirements ensure that a bank has enough liquid assets to meet its short-term liabilities. Are these true? False? Let's have your answers on the chat as soon as you think you know. Got answers coming in. I can see some C's. I can see an A. This is a little bit slower. Again, I think people are less sure about this. Let's give you a little bit longer. It looks like people are really having to think. Lots of C's though. Jim, do you want to show us the answer? And the answer is D. Now, I didn't see a D anywhere on here.
Nope.
So
I didn't.
No.
You didn't either. Right, better have some explanation of this then. Right, statement number 1 then. This is false because microprudential regulation is aimed at individual firms within the financial sector. You're looking at that individual business, whereas systemic risk, that's all about the breakdown of the whole system. Now, I wonder if do put your comments on the chat if you want to. I wonder if what people were thinking is that the regulatory authorities decide which individual organisations they're going to look at in terms of if there is a problem, the risk that that would cause a systemic problem. So I wonder if that's where people have got a little bit confused here. Statement number 2 is false. This isn't what capital is all about. So capital, I always think of it as being the buffer. Really, it's the buffer, it's the thing that's going to absorb losses on the asset side of your balance sheet and mean that you still have enough money left to repay your liabilities. So it's the thing that avoids banks becoming balance sheet insolvent. All right, I have got one more task, I believe, if we could have that, Jim. This is a 60-second challenge. Now, Ollie the other day got himself in a muddle explaining this, so hopefully I'm going to do a better job. You simply need to match the letters on the left with the numbers on the right, and you've got 60 seconds to do it. So, Jim, if you could start us going, please.
You made that sound so simple, Kathy.
Well, I had warning and practice. That's 15 seconds gone. I think some of these are easier than others. Halfway, so let's start seeing some answers on the chat. I can see a B and a 3, A D4, C2, D1, E5. 10 seconds left. 5 seconds. And that's it. Jim, could we have the answers? So here we go. Let's see how you got on with this. So first of all, the US investment bank that filed for bankruptcy on the 15th of September 2008 was, of course, Lehman Brothers. Now, I'm imagining people on the chat are considerably younger than me, but I think a really important thing to understand is just what a monumental event this was. It was shocking beyond belief at the time. I'm going to come to C next because I think it's easier to understand the second one once we've done that. The name given to mortgages issued to borrowers with a poor credit rating is subprime loans. So some of these subprime loans were really quite extraordinary. They were made to people with no incomes at all. What everybody was thinking, what people were hoping, is that actually the loans to buy houses, the price of the houses would rise, and that would give people the means to repay these loans. So if we come back to B, then it was the fall in property prices that actually meant the whole thing started to go wrong. D, recession is, of course, 2 consecutive quarters of negative growth. And E, the size of the UK bank rescue package announced in October 2008 is this extraordinarily large figure of £500 billion. Right, that is it from me. I'm going to hand over to Ollie, who I believe has some short straw activities.
You believe correctly, Kathy. So the short straw, what I'm looking for you to do is to rank 4 pieces of information, which you'll see on the next slide. But crucially, the answer that I want to see in the chat from you is the one that you think is ranked 3rd. So Jim, if you go to the first slide, first short straw. So here we've got 4 banks, 4 UK banks, and what I would like you to do is rank them from the highest to lowest in terms of total asset holdings, so the value of their assets on the balance sheet. But the answer I want to see in the chat is which one you think is ranked 3rd out of the 4. So let's see what people think. Do we think Barclays, HSBC, Lloyds, RBS? Ethan thinks HSBC is the highest. Interesting, but which one do you think's 3rd, Ethan? A couple of people saying Lloyds. Logan thinks it's Barclays. Faith thinks it's RBS. So RBS is a good example. So the government took a stake in RBS after the financial crisis. So the government bought part of it to stop it from failing. Good example of government intervention. Some might argue it was government failure to an extent, but that's up for debate. A few people saying Barclays. Very interesting. Jim, let's see what the answer was, please. So if you said Lloyds, you'd be correct. So Alexandra, well done. George, well done. So $1.1 trillion. RBS being the smallest, and I think Ethan at the start, you said HSBC was the largest, so well done for that one. Fantastic. Should we move on to the next short straw, please, Jim? So this one is asking you to rank the top 4 countries in terms of their the central bank gold holdings. So how much gold do they have in tons? But as always, I want to have the 3rd out of 4. So gold's a really interesting one. So Gordon Brown, who was Prime Minister, but actually when he was Chancellor between 1999 and 2002, sold off a lot of the UK's gold reserves and actually sold it at quite a low price. Sold it about $275 per ounce on average. And bear in mind that in 2019, the price per ounce was 1,282. Lots of people thought it was a bit of a bad deal. So we've seen a few Frances, mostly Frances. In fact, nearly all Frances, interestingly. 1 Italy. Any more ideas? Elizabeth thinks Italy as well. Let's see, Jim. What's the answer, please? So Italy was the answer. So well done, Elizabeth. Yes, so US has by far the largest in the world. So this was actually something called the gold standard, used to be in place where all currency, so all notes, would be backed by gold. But the UK stopped this in 1933. I think the US stopped it a couple of years after, and actually no country now has a gold standard. So very interesting. I think I'm handing over to John for this final activity, am I?
You are indeed. Thank you, Ollie. Yes, really quick, very quick bit of fun activity right at the end of our session. So we're going to look at 5 different stock exchanges, and what I want you to tell me is whether one stock exchange has a higher market capitalization value than the other. So by market capitalization value, we're talking about the value of the stocks and shares of all the firms that are trading within that stock exchange. So if we see the value of the London Stock Exchange, please, Jim. So we'll have our first one there. And let's have a look at which nation do we think is going next. And it's actually the New York Stock Exchange. So your task is to tell me whether the market capitalization value of the New York Stock Exchange, the NYSE, was bigger than the LSE. So is it higher or lower? Do you think that the New York Stock Exchange had a market capitalization higher or lower than the London one? So many of you going with higher or bigger. Lottie did go with lower. Let's see if we've got anybody else going to go with lower. Most of you going with higher. It's a quick activity, this one. So let's have a look, Jim. What's the value of the New York Stock Exchange? It is indeed much, much higher than the London Stock Exchange, the largest stock exchange in the world, which kind of helps you out with the next one, by the way. So $26.23 trillion worth of stocks and shares in companies like Boeing and Disney and Ford and a few others. Right, a third one then, the Toronto Stock Exchange, one of the Canadian stock exchanges. There's more than one, but the Toronto one, I think I might have already given this one away. Most of you are going with lower. Let's have a look, Jim. The Toronto Stock Exchange is indeed lower, $2.61 trillion. So the next one, I think, then gives you a little bit of food for thought. It's the Euronext Amsterdam Stock Exchange. Now, what we do know about the Euronext Amsterdam Stock Exchange is that since the UK left the European Union, the Amsterdam Stock Exchange is actually trading more stocks and shares than London. So that's been an impact of leaving the EU. But do you think the market capitalization value of the Amsterdam Stock Exchange is higher or lower than the Toronto one, the Canadian one? So what do we think? So it's the Euronext Amsterdam one versus Toronto, not any before or the UK one. Most of you, I think, are going with higher. Let's have a quick look then, Jim. It is indeed higher, so 5.44 trillion. That leaves us with our final one then, the Shanghai Stock Exchange, the newest of all of these 5 stock exchanges. So based in China, involving lots and lots of the big Chinese firms, Bank of China, Fosun, for example, who own Wolverhampton Wanderers Football Club. Do we think that the Shanghai Stock Exchange is higher or lower than the Amsterdam one? Straight away, we're going with higher from Natasha, from Phoebe. George has gone with lower, though. Zach Sain's massive. He's absolutely convinced that the Shanghai Stock Exchange will be much, much higher. Jim thinks that if they own Wolves, it must be lower. Let's have a look. Let's reveal our final answer. Our final answer of the evening. It is actually higher. So it is $6.98 trillion worth. And obviously the Chinese stock exchange is growing and growing as time goes by. That's it then. That's the end of all of our activities. We've gone a little bit over our initial planned end time. So we'll have to be very quick with our goodbyes.
No, we've got plenty of time. We've got plenty of time, John. Plenty of time.
Okay.
We don't let the A-level politics team in until you're ready to finish.
Thanks to Kathy. Thanks to Ollie. But most importantly, thanks to all of you who've taken part. Most of you started the evening have stayed with us, and some absolutely brilliant answers, I thought. Hopefully you've enjoyed yourself so much. You're going to join us again next week. So we're on again Tuesday, 6:30. Poverty and inequality. Ollie, you're on that one, aren't you?
Yeah.
Don't sound too enthusiastic, Ollie.
I just saw that Logan had spotted your green screen, Jim.
Oh, okay, nice one. Yeah, it's actually, is it a green screen, or have I just been grabbed by the regulators for my Bitcoin trading.
Could be. Oh no! Oh no! What's happened to Jim?
Oh well, I'll be back here on Tuesday at 6:30 if I get released.
Hopefully you will, Jim. Hopefully we'll see everybody back here on Tuesday 6:30, and then again on Thursday at 5:30 again for monetary policy. Now Jim's gone to somewhere much nicer. You can
with
get
real
the
waves. Look, real waves.
they are
Behind
flowing
Jim.
in and out. Kathy, you're right. If you've enjoyed tonight, you can get hold of the slides almost straight away as soon as we finish, and a recording of this video will be available to you. Don't forget to subscribe to the Tutor to You YouTube channel, and you get all the notifications you need for all of the economics plus other subjects, online revision blast sessions, along with other things that Tutor to You to do. Been a great evening. Thanks to everybody.
Well done, Kathy. Well done, Ollie.
Say good night.
It has.
Cheers, John. Well done.
Bye.
Cheers, guys.
Cheers all. Goodbye.